Hello, I'm Eric Fernwood. Welcome to our 2019 Real Estate Investor Outlook. Before I start on 2019, let's take a look at what happened in 2018. The data you see in this presentation may not match what you're seeing in the newspapers. The newspapers will average a lot of different things together in order to generate a single number which works for a soundbite. The data we use concerns the areas our clients invest in and for a very specific property profile. No other property types or price ranges are considered. In 2008, Las Vegas had the highest rent increase of any city at 6.6%. On this slide is a chart showing the number of available rental units by month. As you can see, the number of units has been decreasing since about 2013. So demand remains very strong, and we expect this to continue for the foreseeable future. Prices are only at about 80% of peak June 2006 prices. We're still about $30 per square foot below if we assume there's been no inflation. If you assume 3% inflation, we are about $44 per square foot below peak prices. While prices are dropping in many areas of the country, as you can see in Las Vegas, they continue to increase. Inventories did start rising in the fourth quarter. However, compared to a year ago, they are still very low. It is still a seller's market. That said, we are seeing more good deals and the rate of return is rising. Okay, on to what we see happening in 2019. Before I continue, know that predicting anything beyond yesterday is simply guessing. So that's what I'll be doing, but I'm basing it on what has occurred in the recent past and our own experience over the years with Las Vegas real estate. I see prices rising in the first quarter slowly and then accelerating towards the end of the year. I believe prices will rise between 10 and 15% in 2019. I expect rents will rise faster than they did this year, somewhere between 6 and 8%. The big factors that will affect these projections are significant interest rate increases. The Fed has not indicated it's going to do significant increases in 2019, so that may not be an issue. An economic collapse in China would basically hurt everybody, and that does not appear to be likely. The last concern I have is the House of Representatives. If the House of Representatives is successful in implementing some of the legislation they propose, it will significantly hurt business growth and make the U.S. a less desirable place in which to invest. I'm predicting very significant growth for Las Vegas, and the basis of this growth is in 6 primary areas, which I've shown on this slide, and I'll go into each of these in the next few slides. On April 14th, many Californians will experience a large tax increase. Many will just not be able to afford to live in California. Others will decide that if they're ever going to own a home, they need to leave as well. We believe a number of people will leave the state and a small percentage will relocate to Las Vegas. To put this in perspective, if only 0.25% of the 6 million people retired in California decide to relocate to Las Vegas, that would be 7,500 additional residences, assuming 2 people per residence. In 2018, we only sold about 35,000 properties. If you add an incremental demand for 7,500 additional properties, prices are going to rise. Another factor that will drive prices is land shortage. When people fly into Las Vegas, they see the vast open desert around the Las Vegas Valley. That is all federal land. There is a relatively small amount of desirable land left in the valley, which means that Las Vegas' only real development path is redeveloping what is already in existence. With a large number of people relocating to Las Vegas needing a place to live, the result is going to be increases in property prices and rent. On this side, I've listed most of the major new projects currently under development. When you look at these numbers like $3 billion for Drew Las Vegas or $2 billion for the Raiders Stadium or the new medical school, or any of these other items, keep in mind that all this cash is flowing into a relatively small physical space. The result of these large projects will be a lot of new jobs. These will attract more people to Las Vegas who will need a place to live, further increasing demand on both properties and rentals. Individuals are not the only ones who will be affected by the 2018 Tax Act and rising prices in California. I did a comparison on this page between California and Las Vegas. A couple of really important examples. Electricity. In California, it's 19 cents per kilowatt hour. In Las Vegas, it's 8 cents. The cost of energy has a huge impact on such businesses as server farms. We just learned of a new 750,000 square foot server farm being developed in eastern Henderson. The general consensus is that it is a Google facility, although that has not been officially announced. When you look at the corporate income tax rate in California, you're paying 8.84%. In Las Vegas, 0. Sales tax, 7.75% and versus 6.85% in Las Vegas. Note that counties and cities do add additional taxes on, so if you were to go to any specific city in either state, you would find it would be probably higher. One last item I want to mention is that Las Vegas is one of the few major cities in the U.S. with dual sources of power. That's from Hoover Dam and California. There's many businesses that just simply cannot afford to lose power, and so they end up spending vast amounts on diesel standby generators and so forth. Very little is needed here because should Hoover Dam go down, they're simply going to switch to California. The last major growth factor that I will mention is investors wanting security. People who are relying upon the stock market suffered a very difficult year. A percentage of these people will be looking for a more secure investment. Many people will turn to real estate, and a portion of those people will buy investment properties in Las Vegas. Another group likely to be buying in Las Vegas are current California investors. With increasing taxes, rent control, and additional regulatory burdens, this will drive many to do 1031 exchanges and move their investments to a safer and higher return environment. Some people might question investing in Las Vegas real estate when they think about the 2018 crash. Our clients had 0 decrease in rent and 0 increase in time to rent. Now, their property prices fell 60% like everybody else did because this is a national phenomenon. It's not a local factor. But part of our practice is to target people in occupations very likely to remain employed even in downturns of markets. These people had to have a place to live. The result was we had almost 0 decrease in rent and 0 decrease in time to rent. So if a client made 6% return before the crash, they made 6% after the crash. In summary, 2018 was a great year for Las Vegas real estate investors, and we expect 2019 to be even better. As I stated earlier in this presentation, anyone predicting anything beyond yesterday is guessing. I am guessing. But there are enough positive indicators and forces involved that I think 2019 and probably for the next 2 or 3 years are going to be excellent for Las Vegas investors. Thank you for taking the time to listen to this presentation. And if you have any feedback, I would welcome it. I would like nothing better than to put out a revised version of this based on additional information. Also, if you're considering a more stable form of investment and would like to talk about real estate investing, please give me a call. My name is Eric Fernwood. My contact details are on the bottom of each slide. Thank you again for your time, and I wish everyone the best in 2019.